Let's dig into this market reaction. Joining us now, Mike Lewis. He's head of America's cash equities trading at Barclays. And Mike, I just read all your comments from yesterday, which it's like reading, a newspaper from a couple of years ago. So what did you see once the night played out? What did you see in terms of volatility, solar stocks, technology, everything else?
Hey, good morning, guys. Thanks for having me on. With the uncertainty that we still have, you're seeing a reaction in the market which is probably somewhat anticipated. I think the big news for markets right now, at least as it looks preliminarily, is that there's not going to be a blue wave, which is generally supportive for markets. So, to start, what I would say is I think that the outlook going forward for markets is this is going to be more about policy and the Fed than it's going to be about politics. Which is a good thing for markets from that perspective. And from what you see with what you mentioned with the VIX before, and what you're talking about with NASDAQ futures and S&P futures, it's a reaction in the marketplace which is telling you that, at some point, with this being less about politics and more about policy in the Fed and the stimulus that's ongoing and the likely fiscal which will come at some point, that you're still going to have a supportive landscape for equities.
All right, so from what we're looking at now, as we, I know that you're talking about money, you're talking about trading. This is like any other day for you. But given what's going on in Pennsylvania, Wisconsin, Arizona, everywhere else, what do you expect to see in the futures? The VIX, we're now down 108 on the Dow, while the NASDAQ is up 240. What do you attribute that to?
I attribute it to a couple different things. First of all, we had a pretty significant bout of volatility last week with the sell-off into the election, and a lot of that is based off of some systematic supply in the marketplace. And a natural, Monday, Tuesday bounce was a sort of a lack of sellers for a lack of a better term. What I expect going forward, getting back to what I mentioned before, is when you don't have one party controlling all different parts of the government, it's good for markets. So I expect the VIX, regardless of the indecision that we have right now, and we don't know how things are going to play out, I do think the volatility probably comes in a little bit, and I think that you're going to continue to see the market act well. And when you start getting more results coming from these key swing states in the middle of the country, depending upon which way they go, you could see some things happen on a sector level and a factor level. If they start to swing towards the blue, you might see something happen with solar and potentially a higher a proximity for fiscal stimulus and what that means for rates and the yield curve. If you start seeing it go towards red, it could mean something for less of a likelihood of corporate taxes, and you could see large cap tech act a little bit better.
Right.
It really depends on. It depends on how we see these swing states come. I suspect that we'll have more information as we move forward throughout the day.
Yesterday, I was not only looking at the advance in the averages, but also the makeup of some of that. I couldn't figure it out. I saw conflicting signals on what it was indicating. I mean, I did see something like Disney with theme parks. Disney was solidly higher yesterday. It didn't look like shut-in stocks were doing as well. Do you think the market was sniffing out anything about what was transpiring around the country at that point?
To be honest, I don't. I think that, the way I like to look at markets is when you're heading into something that's as significant as today is, in the days preceding it, you see more reactive risk taking instead of proactive risk taking. So things that are bouncing might have been oversold heading into it. Things that are selling off might have been overbought into it. You can certainly say that, as we saw the polls tightening up a little bit into the election, potentially some factor swings and shut-in stocks, like you say, start to act a little bit differently. But I don't think the action yesterday was proactive risk-taking, and I don't think it normally is in situations like that.
Shepard Smith here. Thanks for watching CNBC on YouTube.